There have been many misleading headlines lately stating that mortgage rates dropped after the Fed's recent rate cut. The fact is, in the real world, mortgage rates went up, as you can see by the graph behind me, and here's why. Let's start with the bond market reaction. Mortgage rates are tied to the 10-year Treasury bond and have the same trajectory. So if the bond goes up, you can expect mortgage rates to do the same as they did. So when the market factors in the signals by the Fed Chair Jerome Powell indicating we can expect fewer rate cuts, the market acted accordingly and rates increased because the Fed warned us, the people, not to expect significant drops. Now, mortgage rates were doing well before the Fed dropped rates because the market already factored that in. The Fed was supposed to do that. What they weren't supposed to do is why the market reacted badly, because we weren't anticipating a warning by the Fed. Check out my videos on the rate playlist where I go into what rates are made of and why they increase. I'm Mortgage Mo, and I'm here for you to get the best loan for your new home. Stay blessed.